So you're from the UK and you're looking at getting into investing into the stock market. Now I know from experience it can be an absolute minefield out there. CFDs, options, stocks themselves, different markets, different currencies and different brokers. Where the hell do you start? The aim of this video is to actually answer majority of questions you've probably got going on. Where the hell do you start? And also at the end of the video, give you free tips to make sure that your investing journey is a successful one. Now without further ado, let's just crack on because we've got a hell of a lot of ground to cover. Now, if you are new here, to clarify, this is not financial advice and you should do your own due diligence before it comes to making any investment decision. I'm just a guy with a beard on YouTube talking about stocks and investing and trying to inspire people to start taking their investing careers more seriously. That said, if you are new here, please do consider subscribing and turning on the bell. And if you haven't done so already, please do make sure that like button is turned blue. It will help this video reach a larger audience and, more importantly than that, help out fellow people like yourself who are looking at starting their investing journey. And if you want to support my work, there's a Patreon link down in the description where you can get some exclusive perks, including our investing chat room. But if you want to get that chat room for absolutely free, you can sign up on eToro on the pinned comment, sign up, deposit, and make just one trade, and you get that chat room absolutely free for life. So feel free to go and check out Patreon and eToro on the pinned comment. Now, to be clear, we've probably all seen these YouTube ads on how you can get rich quick, start day trading, start investing. Now, this video itself is specifically designed at investing. If you want a video more on day trading, let me know down in the comments. I've done a few of them in the past. But for me, I don't think there's that much good content on YouTube talking about investing if you're from the UK. Now, to clarify the differences there, day trading is something where you buy and sell a stock in the same day, or even sometimes you can argue a few days. The purpose of this is to sort of get rich quick. You're going to buy a stock and try and make a quick 10, 20, 30, 50, sometimes even 100% gain, cash that out, and then rinse and repeat this process. Now, the problem with day trading is day trading itself. There's many people out there, probably people even advertising on this video, trying to sell you a course for thousands of bucks on how you can get rich quick. Just to be clear, day trading is very, very dangerous and majority of people lose. So don't think you're the exception, because if you go that route, I can pretty much guarantee you will never make $1 million US going the day trading route. So hopefully that helped a few people who are looking at going the day trading route. Let's talk about investing. You can still make riches investing, but more importantly than that, it's a hell of a lot safer. Now, the first thing with investing is you're going to need a broker. You're going to need somewhere where you can deposit your money and then buy and sell stocks or options or CFDs, whichever route you want to go. And I'll come on to that in a second. Now, for new investors and people who are looking at investing long term, I can't recommend eToro enough. It's a place where you can deposit and make free trades. It's got a relatively easy platform with a social aspect. So you can actually go on there, deposit from your bank card, which saves a lot of hassle in itself. It's very easy to set up and you can make commission-free trades. But for me, if you're a new investor, the biggest thing about eToro is you can type in a ticker symbol on eToro, for instance, Apple, and you can actually see what other people are talking about on a social platform. You can then interact with people and ask them questions. Another big plus with eToro is there's a popular investor program, and yes, I'm on there under the name LWT Trading, and you can go on there and you can see what other investors who are a lot more experienced than you are talking about, looking at, and more importantly than that, you can actually see their portfolio and sort of mimic it. There's no shame in mimicking people who are investing, and I think it's a good way of sort of kickstarting your learning journey when it comes to investing in stocks. You can also actually copy people on the popular investor program. But if you're looking at investing yourself, I don't think you should go that route. I think you should actually look at more investing yourself and try and learn and educate yourself, because that's the end goal, to become self-sufficient as an investor. Now, in full disclosure, the bulk of my stock portfolio is not with eToro. It's with Interactive Brokers, and I do prefer Interactive Brokers over eToro. But Interactive Brokers is not a free platform. It's quite expensive, but they do have some cool tools. For me personally, I think if you've got like $50,000 US, Interactive Brokers makes sense. But in the beginning, when you're sort of learning the curves, I think eToro is a much better option. So my advice, even though it's not financial advice, would be that start with something like eToro where it's free and you can sort of learn the ropes a little bit. And then once you've built your account up to a substantial size, you can then start looking at more serious brokers like Interactive Brokers, which do cost money but have a lot more tools available. But if you are looking at going the Interactive Brokers route, you've got to wire money to it, which can cost you money from your bank and Interactive Brokers. It costs you money to make every single trade, and the process of opening an account can take up to 2 weeks. For me recently, I opened an account for my wife, and it actually took over a month to get fully verified and the money to be deposited to them. But whereas with eToro, you can literally click the link on the pinned comment, sign up very, very quickly, deposit via your card, the money's there instantly, and make a trade. And bearing in mind, if you do that, you get free lifetime access to the chat room. So by this point, you've opened your brokerage account and you're looking at investing. Now you've got the US market, European market, UK market, Asian markets, and God forbid, the African market. And to be clear, before the social justice warriors get triggered, that's got nothing to do with Africa itself. It's just that market offers very little in terms of safety, and it's something that I think new investors should stay away from for now. But having access to markets around the world do have some pros and cons that a lot of new investors overlook. First one being currency risk. If you're watching this, you're probably from the UK and you probably have Great British pounds to invest, or even maybe some euros. The problem you've got here is the biggest market in the world is the US, where everything is valued in US dollars. So you need to make a decision. Do you take the currency risk? And if you think the currency risk is not important, you couldn't be further wrong. Currencies fluctuate a hell of a lot, and all you've got to do is look at the pound to the US dollar over the past 10 years. If you bought US dollars at the wrong time, you could lose 20% there. If you bought it at the right time, you could make 20% there. It's just a simple example, but just be aware that this is going to be an issue. Stocks listed in the US, for example, are going to be valued in US dollars. On the London Stock Exchange in the UK, they're going to be listed in pounds. In Germany, they're going to be listed in euros, and so on and so on. Now, brokers like eToro take this away from you because your whole account's going to be valued in US dollars. It makes things a lot easier for you at the beginning, and yes, you may take a currency hit or gain at the beginning. But your whole portfolio there will be valued in US dollars, and I think that's down to the fact that majority of stocks in the world are listed in the US and in US dollars. So again, for the beginning, in my opinion, it's probably best for you to go to your bank, convert the money you're looking at in pounds to US dollars, and then send US dollars to eToro, Interactive Brokers, or wherever you're looking. I value my total net worth in US dollars. I always have and I always will. And that's just because majority of my assets, believe it or not, are actually in the US. Well, especially stock trading related. Now, sticking with this subject of the US, Europe, and the UK, there's another overlooked issue here. And that is, what are you actually buying? For example, in the UK, you can buy things called CFDs, contracts for difference, which means you're not actually buying the underlying stock. You're buying a contract from the broker. Now with eToro, when you make a purchase, for example, it will tell you if you're buying the underlying asset before you click buy, or if you are buying with a CFD. Now, contracts for difference do have a time and space, but if you're a new investor, I'd be very, very careful. You don't get your dividends usually, and they can be very, very volatile because the price is actually set by the broker themselves. There's another thing called options you can look at as well, which are very, very dangerous, which means you're buying the future price or predicting the future price, and you're trying to buy or sell on that, which I've heard many horror stories from. And if you're looking at investing long term, I don't think that's for you either. The safest option for me is just buying the underlying stock. And I think if you're a new investor, that's definitely the way you should go. And you for sure shouldn't be touching leverage with any broker. There's no shame in starting out small and building up and investing regularly. If you haven't checked out my Coffee to 100K series, go and check it out. It's where we invest a regular amount of coffee a day from Starbucks with the goal of reaching over 100,000 US dollars. And we're well on track, and it's very easy to do just by saving regularly. So go and check that out. So now we have a broker, we have an understanding of currency risk and what asset we're looking at buying. What type of stock should we invest in? There's many out there, and you've probably heard terms like hype stocks, dividend stocks, growth stocks, and safe haven stocks. Well, going into depth, it depends on what your goal is. For me, I like a big range of products in my stock portfolio, especially when I look to the long term. Now, you've heard a lot of people buying hype stocks lately because new investors are coming in. They're buying companies like Tesla, NIO, or NEO as it's called. GameStop is another example. And this stock is the latest hype trend, and that's what people are actually buying and investing into. But the biggest problem you have here is what goes up must come down, and they tend to take the stairs up and the elevator down. And if you get caught, for example, look at GameStop, you can get caught on the wrong side. And if you're a new investor, you're more likely to be hurt than you are to make a gain. So just be very, very careful with hype stocks. That said, in my portfolio, I do have about 10-15% allocated to them, but that is something that I'm looking at long term. Companies like PLTR, Palantir, which are going to be very, very volatile in the meantime, but I've got a very long mindset and they've got a very clear goal. Now, another type of stocks is a growth stock, a stock that is just going to grow and grow and grow. Companies like Apple, Amazon, Netflix, companies that are established that are going to grow at a massive rate every year. 20+% a year is a good rule of thumb for me. So companies that tend to be growing their revenues very, very fast and can do very, very well as the company progresses. The problem with growth stocks recently is they've been mixed in with hype stocks a little bit, and you can't really differentiate the difference. Airbnb could be considered a growth stock and a hype stock at the same time. And we're in a world where people are not really using Airbnb as much as they used to. So just bear that in mind when it comes to buying and selling growth or hype stocks. Now, without a shadow, my favorite stock class is dividend stocks. These stocks pay you a dividend. And if you don't know what that is, basically you get a percentage profit share of the company's profits. And that can be monthly, quarterly, semi-annually, or even annually. Now, if you have been watching the channel for a long time, you'll know BP is one of my favorite dividend stocks. It pays you a dividend every single quarter, and I get paid that back into my brokerage account at eToro, at Interactive Brokers, or wherever else I am buying any dividend stock. This money then gets credited into my cash account and I can take it out and live on it, or I can reinvest that into the same company or even a new company, but it's nice to get paid as a dividend every so often from majority of companies. It's been proven time and time again that investing in dividend stocks and using this to reinvest into the stock market as the stocks go up as well, it's a solid way to grow your wealth over a long period of time. The downside with dividend stocks is it can be quite disheartening, because if you're looking at making, say, $500 every single quarter, with BP, well, you need a decent amount of money under management. But recently I did get paid over $500 from BP in a single quarter, and it feels very, very nice when you get a notification on your app you've been paid a dividend. That said, there is some very, very sketchy dividend stocks out there, so be very, very careful. But typically your more established companies tend to offer a dividend. Some of them offer crazy rates of over 10%, but bear in mind, if it is a 10% dividend, there's probably a reason for that. And if the stock price goes down more than 10% a year, but you get a 10% dividend, you've still lost on that investment. So make sure you do a lot of research when it comes to picking any stock in general. But if you want a video more on dividend stocks or even UK dividend stocks, let me know down in the comments and I'll see what I can do. Now, there's a thing called an ETF, an exchange traded fund. Now, an ETF is a basket of companies that can also pay you a dividend and grow up long term. It's a way of getting exposure to a set sector or even the full market, and you can just regularly invest in this. And as the market goes up, your funds go up, and you can even get dividends from this ETF as a basket. Now, ETFs are a great way for investing for lazy investors, and I don't mean that in a bad way, because I do hold ETFs myself. But if you don't know what you're doing but you want to participate in the market, you can go and check out Vanguard or BlackRock or some of these big ETFs, invest, and they basically take a very minuscule fee, and then that money will grow over the long period. You'll get your dividends and someone else is managing your money for you who knows what they're doing and are qualified in that sector. Now, probably the biggest thing people ask is, how the hell do you find stocks to invest in? Well, there's many websites out there that are free, like FinViz. TradingView offers a basic scanner as well. But when it comes to really finding a good platform, you need to splash some cash. Now, one of the best, in my opinion, is simply Wall Street, where you can go in there, you can actually plug in your portfolio. It tells you a full breakdown of your portfolio, but it's also got a very basic stock scanner. You can search out by value, by dividend. It's very, very good, and I think very, very user-friendly, especially for beginners. Now, also when it comes to finding stocks to invest in, try out chat rooms, try out Twitter, listen to Bloomberg News while you're brushing your teeth every single morning, and you'll start getting involved more in the stock market and start finding stocks that pique your interest. It's not about copying everybody else. You might have the mindset that green energy is the future and you think you should invest in that sector. You might be listening to Bloomberg one morning and they're talking about Greencoat Wind Energy in the UK, which is a wind farm company, for example, that pays a solid dividend. But to be clear, I don't really like the company setup, but it might be for you, and that's a good way of finding out about this company because I actually found out about it from Bloomberg. You can download the Bloomberg app and just click radio and listen to it there every single morning, especially when you wake up around about 7, 8 a.m. It's a good market recap and I strongly recommend it. Again, coming back to eToro, their social platform is quite good as well at finding what other people are talking about. But again, the whole point of this is be involved in the market and listen to as much financial news and opinions as you can. But the key thing really is making sure that you make your own opinion and assumptions and don't just follow somebody else's trade perfectly. Because if you do that, it won't work long term. Now, I did promise you some tips when it comes to investing. And the first one really is have a long-term mindset and don't quit and be patient. Provided you're buying legitimate companies and good stocks and regularly investing, it's going to be very hard for you to lose money long term. But if you buy GameStop with leverage and keep buying GameStop, it's probably not going to end well for you. Keep your portfolio very well diversified and continue the path and you will be good in the long run. So tip number one really would be having a long-term mindset and a focused plan. If you buy Apple and you go down 20%, that's fine. It's Apple. It will bounce long term. So continue buying as it goes down. Get yourself a good average. And again, with that long-term mindset, you should be fine. Tip number two, I just touched on, don't YOLO a stock with leverage or use high leverage with a CFD. If you just continuously buy GameStop, you could blow up your account, the broker could call you in, and in some cases, you could even end up owing that broker money if you're not careful. Now, that's not there to scare you. That's just saying pick your stocks carefully and don't go and bet the farm on one speculative play, such as GameStop or Neo or any EV play, which is a good examples recently. Check out Lordstown Motors, check out Nikola. All these companies are down like 80-90% and will have burnt a hell of a lot of new investors along the way. Now, if you're watching this far, the biggest tip I can give you would be to make sure that like button is turned blue and comment the code word below, which is Bloomberg. And tip number three is Bloomberg or financial markets. Be involved in the markets, try reading, sign up to some free blogs, sign up to some newsletters, and just be involved in the market and see what people are talking about. I can't stress enough, as somebody who was working in finance for 15 years, how important it is to just get your daily dose of the stock market, preferably before it opens in your time zone. And the reason for this is it gives you a little bit more confidence that you know what you're talking about. You can listen to financial experts talk about opinions. It might be bewildering at the beginning, but trust me, it will get good long term. Check out the biggest news on Yahoo Finance. Check out the biggest news on Bloomberg. Get an assumption and you'll find stocks that way. But more importantly, you'll have a good mindset when it comes to investing and be able to show off to your friends down the pub that you know what you're talking about. So hopefully I've answered the majority of your questions when it comes to investing, especially if you're from the UK. If you've got any other questions, let me know down in the comments. Please do subscribe and turn on the bell. And if you are going to sign up with a broker, check out eToro on the pinned comment. You can sign up there, and once you've made your first trade, drop me an email on the pinned comment again, and I'll give you the free lifetime access to the LWT chat room, which will save you a couple of $100 a year because you get it free for life. Don't forget the code word Bloomberg down in the comments, and I'll see you in the next one. Take care. Peace.